Welcome back to Finweek Money Matters. In Finweek's Investment Clinic column recently, an investigation was made into the investment alternatives to buying ETFs. This included the Standard Bank Auto Share Invest and the F&B Share Trader products. While these are undoubtedly good options, many are interested in looking at what the cheapest and the easiest ways of buying shares really are. For this discussion, we have called on the expertise and thoughts of Lisa Segal. She's the director at GINS Global Index Funds, and Mark Humphreys, business manager at Standard Online Share Trading. Thank you so much for joining us on the desk. So for the duration of this conversation, I'm going to call you Mark 2. So let's start off with Mark 2. In your view, Mark, why are we seeing ETFs increasingly becoming a preferred model over mutual funds?
Well, I'm not so sure why so much of mutual funds, but certainly in the DIY investor space, which is where we are busy. Many people don't know where to start. So the ETF offers a nice, easy entry into the market. The whole notion of why try to beat the market when you can buy the market. And that is a real advantage of the ETF. You're not paying a huge upfront management fees or anything like that. And no disrespect to fund managers. I know that they do get a lot of value often, but sometimes it's a bit of a gamble. And as a novice investor, well, this is an easy place to start.
Mark, maybe a starting point with this. Are we seeing more DIY investors actually come into the market? Because when you look at let's use the unit trust space as a starting point. I mean, there's 900 unit trusts in South Africa. I mean, I've seen stats of about only 125,000 DIY investors in South Africa. And there's a huge disconnect about how people are getting into the market. If you look at online share trading, are you seeing more and more DIY investors coming in, or are numbers pretty flat over the last couple of years?
Absolutely. We've seen numbers grow phenomenally. Our client base has probably doubled in the last 3 to 4 years. Okay. And the particular product that we're talking about today is right at the bottom of the rung in terms of where to start. It's really targeted at that niche space of somebody who can afford to save, say, between 500 and maybe 3,000 Rand a month, and wants to get some sort of exposure to the market, be it through an ETF, which is very popular, or if they want exposure to a particular share. Everybody has a story about why they want to buy what they want to buy, but this is one way to do it without having to pay those big fees up front.
What do you think is driving the uptake and the interest in these types of products or services?
I think perhaps obviously media and so on has piqued people's interest in the markets. And I think people are starting to become aware of the type of fees that are involved in other more structured products. And people are realizing that they can do this for themselves. It's not so difficult. The internet is out there. It's very easy to get an education.
Can I interrupt on that point? Sorry. I think what's also happened is you've had this retirement paper come out by Dave McCarthy, and they're talking a lot about fees. And also the fund managers and a lot of the stockbrokers, and the view is that you're going to have, going forward, not so much of a high return as you've been seeing in the stock market. Right. So when you've got your real rate of return being much lower, in a lower environment, people are starting to question the added value of the managers and starting to look at the costs. Is the costs worth the added value that they're giving? So I think it's also got to do with going forward. We're not going to be seeing such high returns from the stock market and our funds that we have been, and people are more cautious. So they're looking at different alternatives to what they have been on offer now. Yeah, I mean, maybe tell us a bit about what you guys are doing in terms of product suite and why you look at the South African market and what's attractive about it, because I think that'll be a good starting point for the debate about what is the best way to get into the market. We actually do index funds. So on Mark's point, an ETF is actually a different share class of an index fund. We do international index funds, and we're still much cheaper than the local ETFs and the local index funds here. Why? Because overseas you've got the economies of scale. You have about $7 trillion sitting in some type of ETF or index fund product. Last year at Vanguard, they saw more than half of all flows into mutual funds coming into index type products or ETFs. So internationally, that's the space we are in. You're probably having more than half of all flows going into sometimes an ETF and index fund product. There is a lot of DIY investors, as Mark spoke about, but your IFA is different to the IFA here. What the IFA are doing is they would say charge 1%, annual, but look at your portfolio holistically. So they would give a lot more added value in terms of doing your tax, doing your wills, looking at your portfolio and rebalancing it. And then as a result, they would more go the ETF or index fund route to have the cheapest asset allocation for that model. So they're adding much more value than just the broker choosing a balanced fund here. You know, they wouldn't choose, actually, funny enough, overseas, a balanced fund. You don't really get balanced funds or a lot of multi-class asset funds. The best way to get asset allocation models is to take a pure fund. So like an index fund works the best for that, for asset allocation models, actually.
So we're talking cost. You say you guys are significantly cheaper than the local, than what would be your local comparator. What do you say, what do you describe as much cheaper?
Well, I looked at some of the products that I saw on the ETFs, and I thought that the entry costs were very high. You know, that's in your article over there, you look like, you know, you're paying 80 Rand or a minimum of 0.6 on 1,000 Rand or 300 debit order. If you actually had to work that out, say on 1,000 Rand, you've got to earn about just over 8.5% to make back your 1,000 Rand in the year. Overseas, you don't get admin or an entry fee cost. I know it's expensive on the small amounts, so it's very admin intensive, but I think I would prefer for them to increase, say, your admin fee or your management fee and not charge an upfront fee.
Yeah, I mean, Mark, I mean, having gone through, I've traded both DIY and I've done the ETF route. I mean, I totally get the argument for low-cost investing, but when you look at the DIY, there is something fun about, you know, I used an investment club I've seen where they buy whatever, they ask the question, who bought what around the room, and then that kind of drives their investment. Who shopped at ShopRite this week versus Spar? Okay, more people shopped at Spar, we're going to buy Spar share. There is that interest factor from, you know, while costs are one aspect to it, there is that interest factor in terms of being able to consistently buy your Spar shares every month or whatever. How important is that role in this discussion in terms of intrigue?
Well, I do think it's important for investors in general to, as we say, have an edge. So know the company that you're buying. So perhaps that contrasts slightly to what I was saying earlier with looking at ETFs. But for those people who are looking to buy particular shares, you want to be buying something that's familiar. So of course, if you're buying your Spars or your Pick and Pays or something, that's a tangible concept to you. You can see how that company, you can get a feel for how that company is performing. Again, you could contrast that to going the ETF route, which is really your entry-level point, not having to do the homework, so to speak, to go and read up on a particular company, choose between Spar and ShopRite. Just accept that you're happy to take the returns on the market, and that's really our low-level pitch point there. Get some people through the door, get them comfortable with what the market is, what's happening on the market, what bigger factors in the world influence the market, and from there on they can branch out into something more niche.
Mark, how important is it, if we look at these three vehicles, is it to balance just buying what you know and what you're comfortable with getting exposure to a multiplicity of stocks? Is that what investors want? They want the range of stocks to choose from, or are you finding the trend is really about being able to access that you're familiar with?
A little bit difficult to answer. We are sort of each to their own in many ways, but we certainly find at the novice end of the market, people are more comfortable with entering into an ETF space, something where they don't have to have any accounting knowledge or be able to do any technical analysis or anything like that. They can just get a comfortable feel for the market without putting their life savings on the line, and branch out from there. And that's the whole idea of these products, is to start at that point.
I think, sorry, on that point, I think overseas how you would construct a portfolio is the ETF and index would be your core, would be your base level. If you look at a pyramid, would be your bottom of your pyramid, to get the exposure of the market and eliminate certain risks. Eliminate the risk of choosing a fund, say it's value or growth, and this year value is not in, or choosing a fund manager and that fund manager gets their stock picking incorrect. So you're eliminating those risks by going an ETF or an index fund route. And also, you obviously, all you're getting is the market return, so you're not paying high costs for it. So I think what you're saying is that for an ETF, an index should be the core part of your portfolio. It should be your bottom. And then over and above that, you can take your SPAs or pick and pays for some kind of risk, or to be sexy and discuss it around tea or in a bar and having a beer. But I think the core part of is like building a house. Get your foundation correct. And an ETF or index fund is your foundation of any kind of portfolio.
So Michael Jordan, outgoing CEO of FNB, was talking about, one of the things that South Africans have finally woken up to is the fact that they can invest offshore, and it's happened over the last couple of years. And he reckons that the most important decision people are going to make is going to be a tactical one in terms of which geographies you reach. What, in terms of your product suite, gives you offshore exposure at the lowest possible rate?
I would take the MSCI World MSCI World Index Fund, which is most of the equity fund managers would benchmark their fund to that. If you look at the benchmark, and that's 23 developed countries, so it's the developed world, and it's about 1,800 stocks.